Good morning. Welcome to Forex in Four. Today is Monday, November 21st, 2011. All right, we're starting off the morning in some risk aversion mode, and I've actually pulled up the S&P 500 because this is a better proxy for risk than some of the other things we're seeing in the market. I'm going to get to that in a second. But you can see here, I'm looking at the 4-hour chart. We've got S&P pulling back here. All right, we know about the run that we made from the beginning of, I don't know, it was the beginning of the month of October here. Okay, and you can see we're in an upward trend, but once we didn't make this new high, okay, in the beginning of the month, now we started making lower lows, and now boom, we're selling off again. Well, what's happening? Well, we know about Euro debt crisis. I'm going to get to that in a second, but what may be bigger is the U.S. Super Committee on Debt Reduction here in the U.S., and apparently it looks like all bets are off for that. They were not successful. They're going to announce that they weren't able to come to any sort of resolution, which is not surprising to some, given the partisanship and the politics in Washington D.C. here in the U.S. So you can see here S&P is pulling back some, and they've got the November 23rd deadline. There's still some hope there, but it just doesn't look good, and frankly that means the automatic 1.2 trillion in reductions are going to kick in. And the thing about it is that it's not so much the reduction in spending. I'm sure there's plenty of ways that they can find and reduce spending. While yes, it's going to hurt GDP a little bit, it's not a horrible thing. The question is now is that, they really haven't done it in a way that, is going to mitigate the impact. It's just sort of across the board, and there's going to be a lot of people that get hurt as a result of this. So really bad scene. The other thing about it that's important to know is what are the credit rating agencies going to think of this? All right, when we had this whole debt ceiling debate a couple months back, we actually got that first credit down rate. Okay, the markets pretty much blew that off and said, yeah, well, whatever, the U.S. dollar is still the safe haven currency of choice. But, this is just looking worse and worse, and these guys can't get anything together. And now everyone's saying, well, it's an election year, so we're just going to have to wait till 2013 till anything gets better. Are you kidding me? There's a lot of people that are struggling out there, and this is really tough time, and I just hate to see things go down the way that they have been. So this is pretty bad. But you can see here, looking at S&P. So you're going to get a pullback to 50% retracement move from the move up in September. Around 1187 is a decent area. 1162, also 1168 was a number that I'd been keeping an eye on previously, back when we were trading in this range here. So you can see 1168 also sort of gives us a little bit of a support area. So S&P looks like it's pulling back in. All right, but here's the interesting thing, and here's why we started with S&P, is because I want to show you when I can get back my control of my mouse here. I want to show you Euro. All right, and Euro actually seems to be holding in a little bit this morning. All right, that's not a good chart. Why is that? Let's go to Euro here. Euro on the 30-minute chart, and you can see that we sold off back from this 136 level. All right, but now we're right back down to about 134.5. All right, and we identified this 134 area as a little bit of support last week. So, oh, look at this. This is, it says this is updates on my charting system. So you can see right here, 134.30, say that's acts as a little bit of support. Maybe 130. I'll just say 134 even. All right, and it looks like we're building a little bit here as well. Now, that's not to say that we're going higher from here. It's just it's hard to say exactly what's going to happen here. So Euro's pulled back. Well, what's happened in Euro since we've last spoken? Well, in Spain they had new elections. Conservatives were elected across the board. This new guy's coming in, and he didn't sugarcoat it. He said, listen, we're in for some tough times ahead, and we're going to need to take some drastic measures over here to try and right the ship. Okay. Meanwhile, everyone's talking about the ECB's role in this whole thing, and they are still just so very reluctant to come up with the sort of bazooka that the Fed here used to stem the crisis when we had it back in 2008, as the buyer of last resort. The ECB saying, no, we don't want to do it. We're not going to do it. It's not going to happen. And, that's unfortunate, because now the markets are really going to push that to the point where, these refunding levels for these countries are out of control, and they can't refinance their debt at these levels. So we're just kicking the can down the road until a better thing comes along. But at the end of the day, this problem is pretty bad. And, that's what's happening there. So Euro, believe it or not, I'm going to call it holding in fairly well, given the underlying situation. All right, we look at dollar yen here. You can see The yen's been strengthening just a little bit, but just a slow, gradual move down. If we come and we take a look at something like euro versus the yen, okay, I think we'll see a little bit more strength there. And sure enough, you can see that we're down. We're making new lows here. Looks like around 103 and a quarter in euro yen, and I bet you pound yen is even lower. I'm guessing maybe 121 area. Oh, look at that, coming in right to 120. Wow, this is a big number here for pound yen. Let's look at this on the daily chart. Oh, I'm going to go back 6 months. Wow, look at this. Okay, so you can see here we're coming down on pound yen, and this is an all-time low that we made back in September, back around that 117 area. So yen strengthening. Well, they had their trade balance figures. They came in worse than expected. Okay, exports were lower than expected, and China's saying, hey, listen, we got to be prepared here for a worldwide global recession, and it's coming. It looks like it's coming because problems with the eurozone, debt problems in the U.S., nobody's spending. All right, you've got all these factors and headwinds that are up against the market, and it's just going to be difficult to right the ship. I mean, if the ECB steps in and says, okay, let's fix things up, that there's potential there, but other than that, there really isn't a whole heck of a lot. It's just a slow death. And we're looking here at Aussie dollar. All right, I saw Aussie dollar last week, and I tried to show us here that I thought maybe we'd get the bounce. Whoops, where did I look at that? That was on a different. It was on this chart here. Let me see if I can get Aussie dollar up on this one. Aussie dollar. I thought maybe we'd get a hold of parity in 99 cents, and that doesn't look like it. If we close beneath the 61.8% retracement level, all right, we may get a full pullback down to this 95-cent level. So we're gonna have to see what happens, and this sort of coincides with this end of the U.S. Super Committee's debt crisis thing here, that these guys can't get it together by the 23rd. Boom, we may see a bottoms off move, fat tail risk aversion going on, especially going into the Thanksgiving holiday, because quite frankly, there's going to be nothing to be thankful about this Thanksgiving. So that's really what I'm looking at here. Just show you real quick the pound. Take a look at the pound. Pound's been selling off pretty good today. All right, back to this we broke that down, 156 area. All right, 155 looks like there's possibly some support there. They had home prices come in less than expected, so things aren't looking good there. We're going to get the release of the Bank of England minutes on Wednesday. That's going to be important, and it looks like all of the U.S. news has been shifted to Wednesday. Later this morning, we're going to get existing home sales, but they're expected to be a little bit lower. We'll see what happens there. All right, and then tomorrow we're going to get U.S. GDP figures, personal consumption figures, Eurozone consumer confidence. We're going to get the release of the Fed minutes tomorrow. All right, and that's going to be some news tomorrow. And then Wednesday, finally, we're going to get the Bank of England minutes. We're going to get U.S. durable goods orders and personal income and spending here in the U.S., as well as consumer confidence, which is usually a Friday number. So that's really what we're looking at. Thursday, markets will be closed here in the U.S. for Thanksgiving holiday, but we'll get German GDP figures on Thursday, and hopefully those are holding up and doing all right, because it could get ugly. And also we're going to get the UK GDP figures, which they're expected to be lower. So that's really it. And we coast into Friday, not much happening there. So that's sort of the news for the week, but the big news is going to be the Super Committee. Obviously the talk coming from the ECB, if they change their stance or if they say anything that could remotely help the Euro debt crisis over there. So risk aversion, start the morning, and we'll see if we can't get a bounce here on some sort of activity today, but I'm not certain what exactly would make that happen at this point. So that's what I've got for today, gang. Good trading to all.